the ISM number, and then we've obviously got the big jobs number out tomorrow, and most economists are expecting consensus a print of 190,000 jobs in the US. First of all, let's look at the relevance of the ISM number, and then what your expectations are on the jobs number tomorrow.
I think general consensus on the jobs number, let's jump to that first, is 200,000. And I saw Goldman ratcheted theirs down, their expectations to about that number, simply because of the ADP number. Those are the private payroll numbers yesterday. It looked a little bit poor. But get back to that ISM number. I think the efficiencies that have been built in have been in some way not highlighted enough by economists. You know, the efficiencies that companies have built in through these massive job letting, obviously the unemployment rate has dropped a little bit, but that's in large part due to people going out of the workforce entirely, not even looking anymore. And I think it's more a factor of companies being better at what they're doing now, simply because maybe there was a little bit too much fat built in the good years in the middle part of the last decade.
But in your opinion, has the labour market in the US bottomed?
One gets the sense it has bottomed, absolutely. You know, you're starting to see, obviously you're starting to see various signs that this is happening, although the general consensus is it's still going to be a slow recovery on the jobs front, which isn't altogether good politically, to be perfectly honest, and you know that might lead to an extended lower rates for longer, although I did note with some interest that their higher, the Fed funds rate is, you know, even at the end of the year towards Q3, there are some crazies out there that are expecting the Fed to raise rates. I guess it'll all be around whether or not we see this economic recovery. The housing market seemingly has bottomed, you know, those Case-Shiller numbers towards the beginning of the week. We're starting to get the sense that we've bottomed in certain key areas of the US economy, namely housing and obviously employment.
An announcement, and we're starting to see some corporate action coming back into
That's
the
another
local
sign,
market.
of course, absolutely.
Absolutely, there's activity out there, and people aren't shying away from deciding that there is going to be growth. We've got Brait looking to buy out what it doesn't already own of Free World Coatings. It's looking at a 1.7 billion rand takeover offer for the rest. It already owns 19% of Free World Coatings, and it's offering a 34.6% premium to the VWAP, which was on Friday, well, the volume weighted average price. What do you make of the offer? And good news that we've got some corporate action coming back into the system.
And local players, you know, so it's local money being put at risk here. Interesting because obviously it's connected quite closely to the construction sector because of the product that Free World produces. And we've seen a lot of those construction shares trading comfortably below the market average. And no doubt, you know, Free World's not one I look at very closely, but I can bet it's trading also comfortably lower than where market averages are trading, simply because people can't see past certain points, you know. But if you look at the macro theme, we still have to build, 2 million houses or so, and there's a lot of infrastructure to go around that too. So obviously in their minds, they've got a strategic 1/5 stake, and they want to be able to use these depressed prices and are seeing an improving economy going forward. Knowing that sometimes some of these deals are poorly timed, you know, one just has to go back to the Edgar's deal, which worked for 18 months or so, but you know, you don't get much feedback from that other than some of the debt that the entity took on after it took over Edgar's. And one gets the sense that you are seeing a recovery across the economy. And although, you know, our own manufacturing data today was a little bit disappointing, in the previous interview you mentioned that number was at a multi-year high. So it definitely signs that the economy is improving.
Now, MTN today is, and I'm going on this one because I know that it is your colleague Paul Turan's number one stock. Well, one of his favorites, let's put it that way. MTN is down 1/5%. It's trading at 111 Rand 76. That's where it closed today. And we have seen this additional pressure on the stock given all the news flow around the Bharti assets, the Zain giving up its Africa assets to Bharti, that increasing competition in the arena. We've got Nigeria and the additional regulation coming into that space. It is MTN's largest market. But you've got some interesting stats, given that the Apple iPad was released today, and you're going to tie in those stats in terms of internet penetration on the African continent to tell me why we should be looking at MTN.
Yeah, it's interesting because when people look at the stock specifically, their be-all and end-all is voice and SMSing, and obviously the applications that go along, specifically in East Africa with regards to all the banking applications that go with SMS. But I noted that there was a downgrade with Research in Motion. Obviously, that's the push email on your phone with the BlackBerry. And Apple have been receiving higher and higher expectations from the market. I think they trade on a forward multiple of somewhere close to 20, which is a very demanding multiple for Apple. But the release of this new device, which is roughly the size of your computer screen, just the screen, and it's just a touchpad, doesn't have a keyboard, has been, billed as the next big thing, after the release of the iPhone, and maybe a game changer, But I think that, I had a look at mobile penetration, and we're talking specifically on the internet side in Africa, and it's only 3 out of 100 people in Africa actually have access to the internet. So I asked myself, where's the next big push going to come from? Obviously, we've skipped the fixed line generation for all intents and purposes in sub-Saharan Africa, bar for, say, South Africa. But if you think about it, where are people going to be accessing most of their data? And as the rates get cheaper, people are going to be accessing the likes of YouTube or Twitter or Facebook on their mobile handsets. And tied into that, the smartphone market is set to triple in 3 years to
so
half a billion.
So all this is net positive for MTN, is what you're saying?
Unless you believe voice is the be-all and end-all, which I don't. I think we're lagging, obviously, the rest of the even developing world, where in places like Thailand and Vietnam, you get very good internet access. And we're still a long way away from where they're going to be. But I think this one, you need to be patient. And the forward-looking numbers are pretty good. And for me, a growth stock of this magnitude trading at somewhere in the region of 12 times forward represents a good opportunity, notwithstanding political risk and then obviously over-regulation.
Capitec, you would have seen out with results yesterday. HEPS were up 44% for the full year, and they've got a ROE, return on equity, of 32%. So it really is ahead of the pack on that front. Having spoken to the CEO, Riaan Stassen, yesterday, their growth story and their ability to continue their performance also appears to be firmly intact. And the market appears to agree, because yesterday we were at 94.55 on this one, and we closed up 2.1%. Today we're at the top of the top 40, basically, second only to Harmony, up 3%, and it's at 97.40. And we're talking about a stock that has run very hard to date. Your views on Capitec?
Yeah, interesting. I like the space specifically. We prefer African Bank at Vestact simply because of the size and scale of the model. Look, the Ellerins transaction there specifically needs a little bit of time. But I think Capitec's an interesting one, and it just kind of tells you that people are willing to pay a little bit more, because I heard a comment on one of the earlier shows is every time you look at it, it seems too expensive. But you turn around at 60, it's 70, it's 80, it's 90, and now it's nearly 100. But it's still trading at that same sort of similar model. I must be honest, their business principally is a lending one, so we tend to go for the bigger, more well-capitalized. But having said that, look, you got to give them credit where credit is due. They've done a fantastic job at Capitec.